Hi, my name is Yugeshwara Raju. My ID number is 2200447. Okay, today I want to present about background review of two companies, Sunway Berhad and Syntex Berhad. Now I want to talk about the Sunway Berhad background along with its mission and vision. Tan Sri Dato Sri Dr. Jeffrey Chia is the long-term founder of Sunway Group. It was founded in 1974 by a tin mining corporation with a fixed up capital of Rm 100,000 ringgit. Since the year 2000, the Sunway Group has grown to become one of the world's largest property development with a significant number of well-planned business spanning over 50 countries. Sunway Group has a 12 business divisions including property, construction, retail, recreation, commercial, trading and producing, building material, medical service, training and real bankers venture trust. Sunway Group won the highly sought Manufacturer of Year in 2014 as well as a first place in the well-respected The Edge Top Property Development Awards 2014. Okay, now let's talk about the Sunway's vision. Sunway's vision is to drive combination by providing elite and competitive goods and administration that focus on the value of partners. Sunway's major mission is to create innovative, high quality products and services that exceed the client expectation. Similarly, it is necessary to constantly attract, retain, and develop human resources. Okay, from then now, the Sunway Group must achieve market leadership and operational excellence in each business segment. Vision, authority, perspective, and simple business principles and ideal collaboration have shaped the Sunway Group into what is it today. For the second part, we talk about the Syntex background along with its vision and mission. Lim Teck Meng founded Syntex in 1968 as a maker of PVC sheeting. Syntex Berhad is one of the world's largest producer of stretch film goods for the packaging industry. Today in Pulau Indah facility, which is firmly placed inside the West Port region known as the world's largest stretch film office in a single location. Syntex is a global pioneer with product sold in over 60 countries, manufacturing facilities in Malaysia, Vietnam, Myanmar and the United States, Phoenix, Arizona. It is also a major player in Asian strongholds and other modern packaging material, for example, FIBC sacks, structural fill and seal packs, woven bags and raffia items. Since roughly 2013, Syntex has been one of the Malaysia's leading manufacturer of customer bundling goods as well as a pillar in the assembly of automotive interior elements. Syntex's vision and mission is to achieve excellent innovation and a good business performance in a sustainable manner and intend positive aspiration of Syntex to become a RM 10 billion company and completion of 50,000 affordable homes. Syntex income was recorded on Bursa Malaysia beginning around 1990 and it reached the 1 billion mark in 2013 before passing the RM 2 billion mark 3 years later. In terms of income and net benefit, it has always been vertical. Syntex reported earnings of RM 3.5 billion and a net profit of RM 390.1 million for the fiscal year ended 31 July 2020. The group wants to bend over its development at regular intervals to achieve RM 10 billion in agreement by 2028. Under the management of the originator's kids, Lim Peng Jin, who is CEO of the
Hi, my
Syntex.
name is Calvin Hong. I'm a student from Faculty of Science. Today, I want to talk about the financial ratios in Sunway Berhad between 2019 and 2020. First, here are five ratios I would like to talk, which is liquidity ratios, efficiency ratios, leverage ratios, profitability ratios, and market value ratios. First, liquidity ratios. In 2019, the current ratios in 2019 is 0.84 by using the current assets divided by current liabilities. In 2020, the current ratio is 0.89. Compared to these 2 years, the largest current ratio is 0.89 in 2020. Quick ratios. In 2019, the quick ratio is 0.621 by using the current assets minus inventory divided by current liabilities. In 2020s, the quick ratio is 0.624. Compared to these 2 years, the largest quick ratio is 0.624 in 2020s. Next, efficiency ratios, average correction period. In 2019, the average correction period is 899 days by using account receivable divided by net sales times 365 days. In 2020, the average correction period is 1,388 days. Compared to these 2 years, the longest time that taken is 1,388 days in 2020s. Total assets turnover. In 2019, the total assets turnover is 0.0403 by using sales divided by total assets. In 2020s, the total assets turnover is 0.0243. Compared to these 2 years, the largest total assets turnover is 0.0403 in 2019. Next, leverage ratios, debt ratios. In 2019, the debt ratio is 0.56 by using total liability divided by total assets. In 2020, the debt ratio is 0.51. Compared to these 2 years, the largest debt ratio is 0.56 in 2019. Debt to equity ratios. In 2019, debt to equity ratio is 1.28 by using total liability divided by shareholder equities. In 2020, the debt to equity ratio is 1.043. Compared to these 2 years, the largest debt to equity ratio is 1.28 in 2019. Next, profitability ratios. Return on total assets. In 2019, return on total assets is 0.026 by using net profit divided by total assets. In 2020, the return on total assets is 0.012. Compared to these 2 years, the largest return on total assets is 0.026 in 2019. Returns on equities. In 2019, the return on equities is 4.32 by using net profit divided by total shareholder equities. In 2020, return on equities is 8.9. Compared to these 2 years, the largest return on equity is 8.9 in 2020. Lastly, market value ratios. In 2019, the price earning ratio, which is the P ratio, is 0.12 by using the market price per share divided by earning per share. In 2020, the PE ratio is 0.22. Compared to these 2 years, the largest PE ratio is 0.22 in 2020. Market book ratios. In 2019, the market book ratio is 0.94 by using the market price per share divided by book value per share. In 2020, the market book ratio is 0.77. Compared to these 2 years, the largest market book ratio is 0.94 in 2019. That's all my part.
My name is Purni Muniandi and student ID 2200725. I'm going to present about the financial performance analysis of Sintex Berhad and Sunway Berhad in 2019 and 2020. This is the first line graph that shows the current ratio of both companies in both years. As shown in the table, the Sintex Berhad had a greater current ratio compared to the Sunway Berhad in both years. The current ratio that greater than 1 of Sintex Berhad that show the current asset is enough to cover the current liability and it keep the company out of the short-term cash problems. Based on the ratio above, it shows that the Sunway Berhad is facing the liquidity problem. This graph shows the quick ratio of both companies in both years. As shown in the table, the ratios that Sintex Berhad has the high quick ratio in both years. So it indicates that the Sintex Berhad had the ability to satisfy the lenders and the investor by pay the current liabilities. Besides that, the quick ratio of less than 0.5 show that the company is declining in terms of cash flow management. So in conclusion, Sunway Berhad is not performing well in terms of liquidity compared to the Sintex Berhad. This is the average collection period graph of both companies in both years. The days that show in the table, it indicates that the average collection period of Sintex Berhad in both years is considered as short period compared to the Sunway Berhad, where Sunway Berhad has high average collection period in both years. So it means the company can collect the debt from their debtor in a short period of time compared to the Sunway Berhad. This is the total asset turnover line graph for both companies. Sunway Berhad generates 0.04 sales for every one asset in 2019, and then it decreased slowly to 0.024 sales, where Sintex Berhad generate lower sale for every one asset, which is 0.11 in 2019, and it increased slightly to 0.12 sales in 2020. So it indicates that the Sunway Berhad decreased their sales in 2020, where Sintex Berhad increased their efficiency with the asset to generate the sales. So compared with the Sunway Berhad, Sintex Berhad is performing better since the total asset turnover is higher in 2 years. This is the debt ratio graph of both companies in both years. As the ratios show in the table, it indicates that the Sunway Berhad has the high debt ratio in both years compared to the Sintex Berhad. So it shows that the Sunway Berhad is still in high debt and have not paid off the asset invested payments. The debt to equity ratio graph of both companies in both years. As shown in the table, it indicates that the Sintex Berhad has a less risky ratio compared to the Sunway Berhad, where Sunway Berhad has a high risky ratio. So Sunway Berhad has a high commitment for the payment of long-term interest and has a lower commitment to dividend payment. So investor will be facing high risk but also high return when they invest in Sunway Berhad. This is the return on equity line graph. The table shows that the Sunway Berhad had a high ratio more than Sintex Berhad in both years. So therefore the Sunway Berhad more efficiently generate their profit with available equity compared to the Sintex Berhad. By that, the return earned on the shareholders' investment in the firm is high compared to the Sintex Berhad. This line graph shows the return on asset ratios of both companies. By the table, it indicates that the Sintex Berhad has the highest ratio in both years, where Sunway Berhad faced a slight decline in 2020. The return ratio indicates that the Sintex Berhad generate more profit with the available asset compared to the Sunway Berhad. Sintex Berhad does a better in using their asset to generate more income. In terms of profitability, Sintex Berhad is performing quite better than their Sunway Berhad. This is the price earning ratio graph of both companies. From the table, it shows that the ratio of both companies in both years increased in 2020, but still the Sunway Berhad increased 0.06 ratio more than the Sintex Berhad in 2020. Even the Sunway Berhad ratio in 2019 is less than Sintex Berhad. So it indicates that the Sunway Berhad had a high stock price to earn, and it can be in the result the investor might be willing to invest more money in Sunway Berhad. In the conclusion, it can show that the Sunway Berhad has earned high confidence level in the market in 2020. This is the last line graph that shows the market to book ratio of both companies in both years. From the table, mainly it shows that the both companies' stock as undervalued due to the ratio is below 1. Hence, the both companies' stock price are selling for less than their asset, which actually worth. So further, compared to these both companies, still Sunway Berhad has a higher ratio compared to the Sintex Berhad. So in the result, the investor are willing to pay more for the Sunway Berhad compared to Sintex Berhad, where the Sunway Berhad has a healthy profit projection. This is the result of financial performance analysis of Sintex Berhad and Sunway Berhad in terms of time series analysis and cross-sectional analysis. Thank you.
And my name is Chua Yu-hen. My student ID is 2200674. About my part is recommendation, and now I'm going to talk about corporate with influencer and introduce luxury stock. Now I'm going to explain it about its point. First of all, according to the data in the previous paragraph, stock pricing is decreasing in these past few years. Obviously, it may be due to pandemic, but customer preferences are changing fast, and now we are in the era of never developed. As we can see, Most of the latest information are coming from internet. Sunway company can use the emerging trends such as cooperate with third-party retail partners or influencers. Cooperate with influencers will attract more people's attention. Therefore, in my opinion, it's more advisable by partnership with celebrity or influencers when launch any event or opening. Furthermore, Sunway is a place that highly recommended by Malaysian government to foreign tourists, so apparently they are full of tourists. Moreover, most of the Malaysians will choose Sunway for shopping and playing in their Sunway Lagoon. In view of the present station, Sunway company may introduce some luxury stores such as Balenciaga, Louis Vuitton, Hermes, and so on. It's because Sunway company has strong brand recognition in the country, even the world. So it's an opportunity to increase the visitor flow rate, and in the same time, Malaysia as a developing country, there's a trend of customer migrating to higher end products. It will be a win-win for Sunway company and collaboration company for this big opportunity to increase their profit and reputation. On the other side, Sunway company mostly performing great, and some of the example can be learned. Sunway has its own BRT line, and the entire line will pass through Sunway Pyramid and Monash University. Through this BRT line, it makes customers easier to visit their shopping mall. Sunway Pyramid wide product offering have assisted the firm in penetrating numerous consumer categories in the construction service market. It's really increased the company profitability. Additionally, Sunway company has a significant market leading position. It provides smaller company a well direction as a learning material. Now I'm going to talk about my second company, ScienceTech. According to a latest season report, revenue for the first season increased by 15.69% to RM 928.172 million. But in the previous season, it had decreased to 802.259 million. The company operating profit decreased by 5.6% year-on-year. Because the increase in raw material and transportation cost is the main reason that dragged down the company's ability to make profits. In the packaging industry, ScienceTech is challenged by rising raw material and transportation costs and financial market uncertainty. Contrary to this problem, our opinion is ScienceTech can develop technological innovation and improve the industry productivity by learning from other countries such as China. China has a full complement production line and its technological are more mature. Therefore, it's more accessible for manufacture, a complete environment and fast machine to provide a wide range of goods and service. It's made to help ScienceTech to ensure that supply chain can be stable, supply local and foreign markets. The next recommendation is about environmental protection. Nowadays, the whole society is paying close attention to the problem of environment problem, so being the most scientific. Technological innovation and intelligent development company. ScienceTech may started to focus on green and environmentally friendly packaging. It's the future way for packaging enterprises, and ScienceTech should strike the iron while it's hot. Lastly, ScienceTech being out of the best film in Malaysia, it should try to expand into other foreign countries, such as US, England, Germany. ScienceTech already has the experience necessary to compete in a highly competitive market. On the other hand, ScienceTech has several examples for us to adopt. First, in an increasingly competitive field, the first person that discovers the opportunity takes advantages. ScienceTech sales can be growth in the chemical, plastic, and rubber business because of the new product, and every time it may take the chance.